Hey traders, welcome to vast amounts of coffee, which I am already, it's my second mug. I believe it is. We've got a busy schedule today. A little bit of housekeeping to kick off our charts and coffee. My sector secrets folks, I'm going to see you this morning. My day trading room folks, I'm going to see you this morning. My options folks, I will see you at, let's see, 11:30 a.m. Eastern. So I'll see a lot of folks in the rooms. If you have questions, feel free to think about them. I will definitely be doing some Q&A in this environment where we do have a lot of questions about, hey, do we continue to see a rally like this going into the end of the month? And what would that mean? And by the way, in the futures room, in the options room, and in the sector secrets master, I sent out a video to everybody to talk about what I'm looking for, what would be actionable, not in any way projecting, predicting what's going to happen, only that if we get that pitch to certain zones on the chart, we know what we want to do. We want to take a swing. And so those are things that I'm thinking about. What are those scenarios that could happen that would be opportunistic? And unless those scenarios happen, we can't take advantage of a scenario unless we have the checklist for, well, it's got to get here. This is going to be the underlying market condition. This would be the ideal timing, right? We can get all those things in line. We're in good shape. So we have to know what those things are ahead of time, not to say this is going to happen, but rather to say if this happens. And I cannot emphasize that enough. Okay. So if we stay patient in this environment, it will pay off. If we're feeling we need to stay active, that's where we want to be a little bit more short term, smaller windows of opportunity. This morning I got up and I've been testing and retesting our updated and retuned HPMRs, and I said, all right, let's continue to look at some of the early windows of opportunity. And if we're having a slightly more low volatility morning, why would we have a low volatility morning, gang? You take a look at the economic calendar and you say, oh, wait a minute, we've got 2 days of kapow coming up. Yeah, the market might be a little bit more apt to say, you know what, let's kind of take a wait and see approach. And that puts the low end, this dotted line here, in play. So before the market, I actually was on Benzinga this morning. And right before I went on air with the guys over at Benzinga, I went ahead and took my short off the table, took a 20-point S&P trade off the table. I don't want to be distracted while I'm yucking it up. I love being on that show with those guys. I know a lot of you said, "Hey, Rob, we caught you on Benzinga this morning." Yeah, hey there, Mark. They're wonderful. I enjoy my time with them, but I enjoy my time with you all as well. So I thought, all right, I don't want to be distracted. We went from the low to the low. This is low resistance, right? This is low support. That's just one I took this morning, and having some coffee, maybe a little too caffeinated this morning. This is what I'm doing until those longer term opportunities present themselves. All right. But after all, gang, this show is about your questions. And let's go ahead and dive into those. And again, looking forward to having a lot of time with everybody this morning. And so let's move these charts out of the way and grab our first question here. All right, here we go. So Matt, good morning. Could you share your insight? Is there a long-term trade on bonds? What might signal a buying opportunity this summer or fall to hold into next year? Okay. So when I look at treasuries, I'm going to look at ZB, Matt, and ZN. My futures traders, you know those symbols well. And if I'm going to venture into their ETF alternatives, which I love to trade as well, we're going to look at IEF and TLT. So let's go to ZB. If I'm ever going to trade TLT, the trade's coming off the chart of ZB, by the way, gang. That's the futures contract. This is still a downtrend, gang, and we are still in an environment where when you look at the Fed Fund Futures and the CME Fed Watch tool, you'll see we're still on the early stages of the rate hikes. We're still very much in the early stages of the Federal Reserve continuing to hike 3/4 of a point, half point. We're not seeing the leveling off yet. So until we can see, Matt, until we can see that leveling off, I'm not in any way going to front run bond strength. Some traders did it in May and it ended pretty catastrophically for traders that thought, oh yeah, the bottom's in bonds. It's not yet. So I like the sentiment of, hey, down the road, and I love your patience. You're playing the long game. I love it. But we're not there yet. We're just not there yet. So what would be a good signal? Well, if we can get a yellow underlying structure, yellow trend on the trade flag, or yellow lower row on my multi-trend, let's start with that. When is that happening? Is this a little bit more on the mature end of this tightening cycle? Are we seeing the dot plot stay stable? This is all macro rate of change based on Fed fund futures pricing. Are we seeing that the Federal Reserve is moving away from 3/4 point hikes to half point hikes to maybe 1/4 point hikes? And then can we look out 2 or 3 meetings in a row using the Fed fund futures to say, yeah, things are stabilizing. Gang, that's macroeconomic rate of change analysis. And it's sadly not what most traders and investors do. They're going to speculate. They're going to guess. They want to tell tales of what they think is going to happen. Who gives a rip what we think, what I think? We can only trade what we see. So when I see those things, Matt, it's on. Not yet. Not yet. Probably late summer, early fall. I agree with that in terms of the timing. But let's make sure technically we're also getting that other visible evidence in play as well. That's my plan. And then here, the cool thing is, if we know what we're looking at, Fed fund futures, the structure of bonds, whether that be ZB or ZN, if I know what I'm looking at, if any of that takes longer, I know how to measure that. If any of that takes less time, it happens in a more truncated schedule, again, we can see that shift. So awesome question. Awesome question. All right, moving on. Oh, and yes, tonight, if you've ever wanted to pick my brain about, Rog, like for example, Rog, why did you take that S&P trade this morning? Or Rog, how are you day trading? And this is a day trading conversation that we're going to have tonight. If you've ever wanted to pick my brain about recent trades, things that you're seeing, tonight's presentation is not me and some slides walking you through recent winners. Although I do have some recent winners that I'm going to walk you through to show you what I saw and why I took the trades. But tonight is about your questions. If you've ever wanted 45 to 60 minutes, just pick my brain on a topic, this is it. Time, volatility, patterns of day trading, timing. What if I live in Hawaii? What if I live in Fiji? What if I live in London? Rog, what are those windows that I can be a day trader in? What markets can I day trade right now? So we're going to have that tonight. simplertrading.com/answer. I am beyond stoked for this conversation. It's the first time we're just going to kind of open up the presentations, go, you know what? Let's make this presentation about your questions. Rog, what are the HPMRs? Why do they need to be updated? What are you updating them based upon? What's the time interval between updates? If I've got an HPMR that's 3 months old, is that still good? So we'll tackle all that, and more. So fantastic. Good stuff. We'll do that tonight. All right, next up. Hey there, C. Dan. Bought the 37.85, 37.55 put yesterday around 2 o'clock, looking at the market. Well, let's see here. I like the idea of, and this is what I love. See, Dan, I love the idea that you're working with the dominant trend. When you look at that daily time frame, you're working with the dominant trend. I think another thing that you're working with really nicely is the fact that we have an 8 exponential moving average overhead. So the point of validity for a trade like this could be, hey, if that 8 does not hold as resistance, you've got a really easy way to say, boop, I'm out. So in terms of, remember, he's going to be on at what, 9:30, 10 o'clock? They're not on time anymore at all. But if he is going to cite the headwinds of the economy, if he is going to cite the reason to remain fairly aggressive on the rate hikes, you've got a great position there. I don't want to be long into Powell. If there's a catalyst for movement to the upside, yes, he could surprise us and sound a little bit more accommodative. That would be, I think, the lower probability expectation, considering what the dot plots and what the Fed fund futures are reflecting they're likely to do. What I think the catalyst, what I see in terms of a rhythm of end of quarter, end of month, and in terms of support, we're going to need it end of month, end of quarter rebalancing to see that rip higher. So I think the window between now and say Thursday, end of Thursday, going into Friday, probably has a little bit of weakness. But as we go into the end of the month, I'm looking for possibly some movement north of 3,800. So I think your timing for now, based on Powell, is great. Nice trade. I mean, really nice trade. Whether it's SPX, whether it's SPY, whether it's ES, whether it's MES, gang, the trade is the same. It's the choice of you choose your own adventure. Remember those books? Choose your own adventure. I'll look at ES, but this would map to anything I want to do in SPY or SPX or micros or options, right? So that's the way I want to treat the end of the month. Interesting 48 hours basically with Powell. Then we go on to some rebalancing conversation. All right, moving on. DAL. Do I think travel is back? Next quarter should beat. It is the most beaten down. Nibbling. I cannot nibble yet on DAL. So I don't necessarily want to go to the most beaten down, but that said, you've got an interesting retest of this area around $30, don't you? And a minor low forming. The problem is it's in a downtrend still. It's vacillating between chop and weakness. So if I can find something a little bit more neutral, I might prefer that. So crack open JETS. But if you've got at least about a 10% wiggle, I don't see a problem with that per se in terms of getting opportunistic for the longer term. Again, time horizon is everything. Because if we tumble through 30, it's not a far fetch to say the next level of support is going to be around 18 and change. So yes, as long as you keep in mind that there is some legit support, but if we tumble through 30, 20 to 18 could be the next level down. And I wouldn't sit through that much of a loss. I would just rebuild that longer term time horizon. And for me, this is 6 months. I would want to build a position that over the course of the next 6 months, we hold around 30, give or take 10%. So that's the way I would look at sort of quote unquote nibbling at a level where there is a narrative around a price level that could hold. I'm just not sure that DAL would be the best structure, but definitely looking in the right direction. Yeah, I hear you, especially with a longer term time horizon. Can I shed some light on Tesla's move yesterday? Sure. Bring Tesla up. All right. So taking a look at Tesla. Now, everything has to be, for me, Healing Song, taken within the context of the underlying trend. What does that actually mean? What that means is that I have to look at Tesla's downtrend, which is probably the best amongst the heavily weighted stocks in Excel Y, QQQ, SPY. That is a sell the rip. So what you call let's kind of think about the wording we use, right? Would I call that a bull run? I don't know that I would call that a bull run. I would call that a retracement. I would call that a retracement of a downtrend. And the last time that I was looking at shorting Tesla was the 9th of June. Before that was the 1st and 2nd of June. You can see the 2nd, we tagged the wave. 9th, we tagged the wave. Here we are on the 21st, tag the wave. So I'm not looking at that as anything more than a retracement of a downtrend. I wouldn't look at that as anything more than a retracement that I would short into. So that's the way I would view what happened in Tesla. But again, that analysis on a daily time frame has a time horizon of a few days to a few weeks. If you're saying, well, Rag, my time horizon is far, far longer. I want to be in this longer term. I have that's not what I wanted to do. I have a longer term view, for example. What did I just do? There we go. I have a longer term view of Tesla. I have maybe a weekly chart that I'm looking at, something along those lines. So what I would say in that situation is, at that point, it's a completely different conversation. So I think especially right now, gang, when I'm living on a weekly and a 5 minute. Dailies are not offering an edge the way they did for much of this year. So I don't look at the follow through based on days to weeks. I'm looking at either follow through that has a time horizon of a minimum 6 month, or I'm looking at a very truncated window and a time horizon of today, where frankly, I'm freed up to not care what the market does outside the 2 hour window of 4, 5 different windows that I want to day trade. So if I'm day trading in the morning, I want to be freed up to not care about what happens after 11:30. If I'm going to day trade the close, I want to be freed up to not care what happens after 4 o'clock. And that is a freedom of, we don't need longer term organization and follow through, which frankly, we're just not getting. So if we stretch the time frame out to the weekly, more portfolio positions, or we take it down to a daily, that to me is where I'm having the best risk rewards and success rates, right? I was looking at my HPMR trades, and from a futures standpoint, I was breaking down, okay, what's been working and what's not been working. And for me, my breach retreats, yeah, trend following, out the window. Right now, time and volatility is working. This is my futures account for day trading and day trading only HPMRs. This is my options day trades. Now, the options don't need as much, and the options don't have the leverage futures have, but options are also lower risk. So that's why I'm emphasizing short term or that long term. So I think time horizon is going to be a really important conversation for us in terms of managing the remainder of what we're seeing, at least through summer and maybe for the rest of the year. All right, moving on to, and thank you for that question, Healing Song. So Tesla can be a question about now, the next few days to few weeks, which I think is a short. Could be weekly, which we could interestingly see maybe some buying opportunity, or just day trading it, right? If I pull up Tesla on a day trade, I don't know that I have my HPMRs running on. Oh, I do. Okay. And maybe I'm going to day trade the thing, right? I could look at day trades on Tesla. So time horizon is going to be huge, gang, in this environment. Hey there, Yee. Good to see you. When placing a stop order, do I suggest a stop market or a stop limit? Just a good old fashioned stop. So Yee, a stop order. And thank you for the order entry question. So a stop order is a market order with a price trigger. So you don't have to go stop market or stop limit. Although if your broker is demanding that you do stop market or stop limit, here's the difference. Stop market is probably the truest representation of what a stop order is. A market order with a price trigger. So it lays dormant until that price reaches usually the bid. On a stop limit, the same process would have to occur. Your price is reached, but then you're also telling the platform, if I don't get this price, my stop price or better, do not execute the trade. A stop market is going to be subjected to slippage, meaning the difference between what your price was for the order and what your ultimate fill was. You're allowing there to be some slippage. That's what you're communicating. The order says, get me out when this price is met. The stop limit says, get me out when this price order is met, but I won't accept anything better than a certain price. Hence the limit. There is a limit to what you'll accept as the fill. So I hope that makes sense. All right, gang. I see a lot of questions here as far as crude. Gang, I'm still overall pretty bullish crude, but I think it makes sense to be nimble. I would say it makes sense to be nimble because crude is getting hit. Remember, we've got a lot of geopolitics going on with crude. We've got a lot of politics going on with crude. I've left crude alone because the trend was broken days ago. That's the first visual sign. And then now we know that we're trying to see if OPEC will increase production. And that's a political conversation. The president's over in Saudi Arabia. Russia's kind of vacillating on their commitment to whether or not they're part of OPEC plus. They're the plus, for crying out loud, right? We have a lot of nonsense around crude. Nonsense is difficult to trade with that daily time frame, but it's awesome to trade intraday. There's a lot of clarity intraday. Look at the way these things just stair step down, right? So we'll talk about that and a lot more tonight. So if you haven't registered already, it's simplertrading.com. We've never done this before, /answer, right? /answer. And where's the link? I have the link here somewhere. And we're going to talk about a lot of these topics. So /answer. If you've ever wanted to pick my brain for 45 minutes, this is what this session's all about. Rag, why this trade? Why short term? Why these tools? I'm looking forward to sharing that with you. Gang, as always, thanks for being a part of Charts and Coffee. Time to go caffeinate and dominate. We've got Kapow today. Heads up, caution day. I'll see you tomorrow. Same time, same station. Be good to each other.